Welcome to Module 3 of the Small Business 101 webinar series. This module is all about setting up your business, including your structure, registration, the business name, and even walking through a startup checklist of the first things that should be done to ramp up your business. With this module, you will be well on your way and can start calling yourself self-employed. This is the third module of 10 that complete the Small Business 101 webinar series. The Small Business 101 series will get you started with some of the most important information you need to know as a startup entrepreneur. The goal of this module is to figure out the practicalities of getting started and specifically what should your business structure be and what you will call it. In the last module, we walked through idea validation and discovered if your business idea will fly. Now let's continue on what you need to do next. Now that we have decided to get started, we need to start. The longer that you wait at this point, the longer that it takes you to start getting money. And the longer that that all takes, the likelihood of your business not working increases. You need to start making money and have all the pieces in place to allow you to do that. A common mistake that an entrepreneur makes at this stage is continuing to debate about what the logo should look like or not settling on a name. Although these are important things to have in place, it is equally, if not more so, to be ready to start selling. Let's get started in doing the basic logistics of getting started. To do this, we're going to talk about the following key factors: the type of business structures, registering your business, and choosing a business name. The type of business structures. These are the strategic decisions that you're going to make about the business model that you're going to be using. Next, registering your business. What type of legal structure will you use? We will walk through what the main ones are and why you might choose one over another. Finally, we will walk through how to choose a business name. Not only will this give you a process to go through, but it will give you confidence that you have chosen a good one. These are all easy things to put in place, but they often delay entrepreneurs or stump them in moving forward. Let's get this out of the way so that you can focus on marketing, selling, and making profits. The point of startup is really exciting, and you are starting to move forward and put some of these pieces in place. But this is not the process of running a business, and the hard stuff is yet to come. Don't get bogged down in this. You need to set up your business, get it registered, and move on. So move through the checklist as quickly as you can to start focusing on getting your first sales. Business structures. Although we will be covering legal business structures in this module, we're going to start with the overview of different business structures and clarifying business channels. Often, as entrepreneurs, we assume that what we see as consumers is the right or only way to run a business. We are familiar with large chains such as McDonald's, or we only are used to seeing products being sold, or we think about storefronts on main streets. But there are more options to think about when starting a business. We will be walking through the definition of these strategic decisions, as well as contrasting the pros and cons of each of these business structures, including business channels, retail and wholesale, franchise or independent, and products and services. Retail. What is it? This is any business that is customer facing and would often have a physical location. Although with online businesses, this is not necessarily true, and retail locations find it mandatory to also have an online presence in many cases today. This is increasing in importance, and you can see some retails doing a hybrid model. For example, ordering online and picking up in store. This is a good model to optimize convenience and upselling opportunities, because when your customer comes into the store to pick it up, they may also purchase other products and services. The advantages are the customer relationships. Plus, by having the physical location, the customers can see the product and service. This lends credibility that the customer will actually get what they are paying for. This helps with sales conversion. Of course, there are disadvantages as well. The cost of rent is often high, as prime locations often dictate whether a store owner does well. Store hours would have to be maintained, especially in a mall setting where the mall management requires store owners to have the same hours as the mall. You have higher ongoing costs all the way from keeping the lights on to having staff present when the store is open. Wholesale. This is a less visible type of business to the average consumer, so we don't always think about this type of business. What is it? An indirect market with a channel partner or with only large customers. This means that there is less of a need for the prime real estate, but there is a need for a strong sales force to do the personal selling that is required. Some advantages are that the business is typically focused on more volume, but that often means that the margins could be slightly less. You often are selling to the retailers who need margin on what you are selling so that they can pay for the storefronts and their staff. The larger customers can reduce the overhead that you need in order to manage the customers that you have. On the flip side, you are more reliant on a smaller number of customers, and that could expose you to some risk. Franchises. We are most familiar with these as there are major chains throughout North America. What is it? As a business owner, this would be buying a business model that is proven. Of course, the more successful the brand, the more expensive that franchise might be. It does not guarantee, though, and you do need to work hard. With a franchise, you are buying a system and in some cases marketing efforts, but you still need to run the business. The other advantages are that you will have an existing brand, and perhaps they do the marketing for you. And often they have operating procedures, training, central procurement with established suppliers, and it's in their best interest to ensure that you succeed. Of course, the downside is that there is a cost to all of this. Often a startup cost, as well as ongoing percentage of sales, also known as royalties, to be paid to the franchisor. Alternately, there is a route of an independent. What is it? Well, this is your own individual new business idea. The main advantage is that you have complete control over the business. But on the flip side, this means that you have to learn everything on your own. Often, this is perceived as a larger risk, but you don't have to pay franchise fees and you have autonomy. Product versus services. Let's talk about product. What is it? It's a tangible item that is being sold. The advantages is that people can touch and see it, so they know upfront what they are buying. This helps with sales. Of course, you need to have products on hand, and you might lose a sale if you don't. This inventory can be pricey and extensive depending on how many items and variations of items you need to stock. For example, a clothing store will need to decide on what colors and what sizes to carry. Service. What is it? An intangible task that you're going to do for your customer. The advantages is that there's less physical inventory, but you always have to have staff on hand to perform the service or you might lose a sale. Your employees or you might not be busy all the time, and that could be lost profit. Another advantage, however, is that there are typically higher margins, but along with that can also go higher wages. So, product versus service. Often, this is not a decision. You should actually be doing both of these. Why? A product that is added to a service can make the service better. Think of the hair salon that sells high-quality hair products, and conversely, a service added to a product can also make it better, such as a warranty or some sort of customization. For instance, if you bought a new bike, It would be great if the bike store customized it for you so that your first ride was painless. Registering your business. Now that some strategic decisions have been made on the business model and structure, it is time to register the business. However, before you do this, you should be aware to check the licensing requirements first, which will be discussed in more depth in the next module, to be sure that there are no anticipated problems in acquiring the required licenses before registering. You need to decide between the main legal business structures: sole proprietorship, general partnership, and corporation, and within corporation, provincial and federal. Sole proprietorship. The definition is a single owner of a business that is tied to them personally. The advantages are it's easy paperwork. This is tied to your personal taxes as it is personal income, so there is little additional paperwork that needs to be handled. It is easy to get started as you register your business number in less than 5 minutes online. Control. As the sole owner of the company, you have all the authority. Unfortunately, you also have all the risk. If your sole proprietorship has financial challenges, you are personally responsible for them. If the business is sued, you are sued personally. This all can be a lot of stress on a single person. But of course, you also get all the profits. That said, there can be advantages to incorporate based on your personal tax situation. This is why you should be discussing your business plan with an accountant who can provide advice into what type of business will work best for you to maximize your profits. General partnership. Two or more owners of a business that is tied to them personally. This is a common legal structure for law firms and accounting firms. The advantages are that they are easy to start up. There just needs to be something formal between the business partners, and otherwise, it is still considered your personal income that you would claim individually. Plus, there is more than one person to do the work and invest in the growth of the business. This means that you will have a team working on growing the business. The disadvantages are that it can be difficult to add new partners or investors to the business. Also, it is difficult to separate or close a business if it's not working out for some of the partners. So if you are thinking of a partnership with someone, make sure that you trust them implicitly, that they are competent in the work that they will be doing, and that you have similar goals. You also want to have a clearly defined partnership agreement, which goes beyond the ownership component and outlines main roles and responsibilities. For example, maybe one partner will be responsible for marketing and sales and another for operations and admin. In a law firm, they usually only make a lawyer a partner after years of proving themselves. Corporation. The definition is a business that is set up as a separate legal entity. This means that you have separated the risk from yourself personally. So the advantages are that you can have multiple owners, as they simply have to be shareholders. These shares can be transferred without major changes to the organization itself. Limited liability, which means that the owner's assets are separated from the organization. If the organization goes bankrupt, or if there is a lawsuit, the owners of the company are less likely to be impacted personally. Lower taxation within corporate structure. In Canada, the tax rate is over 40% over a certain threshold, whereas profits that are reinvested in a business are only taxed at the corporate tax rate, which is significantly less. There is an incentive to grow the business. With this, the main disadvantage of the paperwork and the ongoing cost of a corporation. Unless you are making a profit of over $70,000, you might not wish to pay for this higher cost that you will need to pay for your accountants and other paperwork that is involved related to being a corporation. As mentioned, when we were going over the advantages of a sole proprietorship, you will need to seek the advice of an accountant. So, what to choose? Grab your business legal structure decision making tree worksheet to help figure this out. If there is a lot of business risk associated to your business, automatically you should consider a corporation. You should also ensure that you have sufficient insurance. This would be important for a theme park or casino. It is also necessary depending on what kind of business you have and what your customers require. For example, your customers may require you to have a certain level of general liability insurance. If the business risk is lower, such as a small clothing store, you then need to consider your income. If this is above the 100,000 per owner of the company, you might want to start considering a corporation. If your business needs reinvestment and is growing, you might also consider this. Finally, you need to consider if you are lower income and lower business risk. You just need to consider how many business owners as partnerships and sole proprietorships are similar other than the number of owners. Although this is a simple decision-making tree, there could be other variables that make you consider other legal structures. Consider consulting your accountant or other professional advisor when making this decision. Now you need a business name. Grab the business name worksheet to get started. Start going through these questions to better understand what you want to be known for. Someone who first hears the name of your business should have an immediate idea of what you are selling, to whom, and what you are all about. As an independent business, if this is the direction you selected, the brand needs to do this so that your job is easier. If your brand does this for you, you can explain what you are selling quicker and easier. This means that more people will understand what you are up to and therefore be more willing to buy. So the first step is to figure out what words you need to have in your name or themes that should be there. This worksheet will show you what those could and should be. Once you complete this, start blending the words together. Use some synonyms and see if you can come up with something creative. Creativity isn't everything. Now that you have done the groundwork, you need to know if you can actually use it. Is the name appropriate? If there is any negative connotations, you should not use it. Does it have a meaning in any other language? You want to make sure of this, and if it means something that is not appropriate, you probably should not use that name. Is it easy to remember? The more difficult to remember, the less likely you should use that name. Does it separate your name from the competition? You don't want it to be too close to be confusing, and you don't want it to be too generic so that it's considered boring or forgettable. Can it be used in the long term? Often businesses select their names based on how they plan to start. But sometimes when things are going well, they may morph into selling something adjacent in terms of product or services, and the initial name might not make sense anymore. Is the name available? The first thing is always to make sure that the name is available, along with the domain names to see if you will have a good website name to accompany it. And closely thereafter, you need to check if it is trademarked or registered. And don't forget to test it out. Those individuals you surveyed, interviewed, or had in a focus group, ask them. You have a lot decided now and are continuing to move forward. But your first month of your business has a lot of these things that also need to get done. So grab your startup checklist and go through this so that you can make sure that you are continuing to move forward. Now get started. Module 3 is all about the first few steps of getting your business off the ground. We went through some strategic, structural decisions, registering your legal structure of your business, and choosing a business name. Plus now you have the checklist to get started. You now know the first critical steps that you should be doing in the next month. Module 3 is the third of 10 modules for the Small Business 101 webinar series. Let's get going.